Good morning, guys. We're going to get right into the stock charts. I'm going to throw out some trade ideas, explain to you exactly what I'm seeing around these trade ideas and why I like them, and cover some of the technical analysis of the general markets. We got gold miners running a little bit this morning. Before I get started, someone asked me why I like to put out videos in the morning and not wait till after the market closes. And you know, I do both, but I like to put out videos while the market's trading. Usually I wait about an hour or two after the market opens to get just a general sense of where the market wants to do or what's holding strength, what's showing weakness. And then I try to put a video out so that it gives everyone an opportunity to, you know, look at those the trade ideas that I'm putting out, or look at the stock charts, and then make their own decisions while the market's open. And I don't always do that. Sometimes I'll wait till the market closes if there's just nothing that I can really read from the chart while the market's opening. If there's nothing happening, then I'll wait. But ideally, I like to put it out while the market's open. I lay out the levels that I'm looking at. So ultimately, if the market changes in the last hour of trading, then you have the levels that, you know, that are out there, and you can basically look at the market action into the close against those levels, and hopefully that gives you kind of a preemptive look into what you might want to do when taking a position. Okay, I'm just going to jump right into some things that I see that I kind of like. And then things that trades that I'm actually in, and positions that I have that I've called out in the past that seem to be, you know, are continuing to work or look like they're starting to work out. We're going to start out here with this KHC. KHC, Kraft Heinz. I like this for a longer term kind of hold because it pays a pretty solid dividend. I think the dividend's sitting around 4.5%. So not a bad dividend. And the other reason I like it, a couple things. One, this thing's been in a bear market. You can see the stock, it's from the highs, it's been down a total of 80%. So it's really washed out. I mean, you've had a lot of the longs that were in this have capitulated. They've washed out, and now it looks like it's starting to bottom out. So on the daily chart, this is the head and shoulders pattern, or inverse head and shoulders pattern that you can see. You've got this shoulder here, and a head. It's not the cleanest, but you know, it's a possibility that it's an inverse head and shoulders. And then we've got the neckline. The neckline that I see is really right about here at this 33.61. But if you want to give it the benefit of the doubt neckline, you've got this gap right here, this big gap at 36.10, and this huge gap. The gap fill is up at 48. So this was a massive plunge. When it gapped down 25, almost 26%. So now that that's had an opportunity to really wash out anybody, it looks like it's starting to claw its way back. So here's what I like. Gap entry, just remember that. Gap entry is at 36, and that's a big 25% gap. And you can see as I zoom in here, look at the price action that we have. It shows a little cleaner on the daily or on the hourly. Look, here's your support at this 33.50, and I pointed that out. That's big support. Actually, I need to go back to the daily real quick just to show you that. Look at this 33.50 right here. You can see it held as resistance right here, resistance right here, resistance all through here, and now it looks to be holding a support. You can see held a support right here, and if I go to the hourly, you can see it fell down right down to that 33.50, undershot it a little bit and closed just right at it basically, and held as support, and then it started to move higher. You can see it's starting to move higher now. So that was a successful test of support. It held. So now we've tested resistance up here, we've tested support, we're in this range. But the thing is, I like the fact that it's moving up. It's held support now, which was big former resistance, building a base. I think this looks good for a move into the gap and potentially a gap fill. So I'm gonna I took a position on this, and I'm gonna hold this one. If the market falls out of bed, then we'll have to watch. But 33.50, you know, a solid daily close below 33.50 would probably be the area that I'd want to stop out at. I just don't want this thing going back down in that range. So if it's going to close below there, then I'd stop out. But otherwise, I think this looks good to do a gap fill. So that's a trade idea right there. Okay, here's another trade idea, Adobe. This one I called out a while ago. Looks really good as a short. And I know that this thing has been, has done really well in this past rally. But, just because something's done well in the past doesn't mean it's going to continue to do well. And what the chart tells me is it's a good opportunity to short it now. Here's what I got, and I'll just kind of review the trade idea. I've covered this in past videos, but here's your hourly chart. This is the rally that we've been in since the March lows. And what I've got is, here's your March lows right down here. A little bit of an overshoot, but you have a reaction here, reaction here, reaction here, reaction here, and a reaction here. And this reaction up here came, in the break of this trend line came in the form of a gap, which is impulsive, and a nice big sell-off. So that kind of validates that trend line when you gap around it. So lots of reactions, that's 2, 3, 4, 5 reactions to validate this trend line. And then you also have a back test right here validating the trend line. So really 6 total reactions to validate this trend line. So I like the trend line. I think it's a pretty valid trend line. You can see the gap right here came with some volume, so that's good. Looks like a nice impulsive breakdown with volume. Again, breakdowns of trend lines, you want to see volume to confirm. And same with breakouts. You want to see volume. There's some volume right there. And then we had a back test. The back test was rejected and failed and started to kind of grind around. We're just going sideways right now. But in general, looks good. It's moving. It's moving basically sideways. It's broken down, moving sideways. It's very similar, I think, to what I think like DraftKings did. You can see this is DraftKings. This was your uptrend line in DraftKings, and it broke down, back tested, kind of chopped around, then it broke down. And from the back test, that was a 32% drop. So looks good. I think that's kind of what Adobe is setting up to do, going back to Adobe. So what do I got? Well, I think I'll probably stop out over 456 right up here. Something over there. We've already tested it once and failed. I don't think we should get there again. So a daily close above 456. It's got to be maybe 457.50. I mean, a little bit above 456. If they just barely pop it and close it right there, a marginal close above 456, that's not convincing enough. But if you see a nice solid close, maybe some volume come in, that would probably get me to stop out. Otherwise, run this thing down to 409.30 for first profit target, and that's going to be a 7.5% from the initial breakdown right here, and then I'll draw a few other levels as I see this thing start to work. Looking at the daily chart here on Adobe, negative divergence on the RSI and the PPO here, so you've got nice negative momentum divergence. Momentum is fading basically. Was fading, really back since right in here this was a divergent high basically. When this made a high price, the momentum didn't make as high of a high. So that was a divergent high. So that signaled an impending trend change. And then you got the sell signal or the trigger with the break of the trend line. So in general, I like this. Next up is PayPal. I don't like this one as much as Adobe. The price action hasn't been as good. However, it still looks good. Here's what we got. Ultimately, we've got this trend line here. I've got this trend line right up in here. If I go to the hourly, you've got reaction, 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 a breakdown, and then back testing. A full, we've just been back testing, kind of walking up this trend line. You can see every time it gets up to resistance, it fails and breaks down. So there's your breakdown. Here's another tag of it, breakdown. It's not rolling over impulsively yet, but it's not, it's just kind of walking up this resistance line. So just waiting for some sort of a impulsive move down to confirm the breakdown that this is going to hold as resistance. you've got a gap right here now sitting at about 185. We'll call it 185. So I would expect this to roll over and fill the gap. And then from there, we'll have to see if this wants to continue to roll over. Going to the daily here. Nice, clean negative divergence. This is a really powerful negative divergence right here. See the PPO? If you don't have PPO, use the MACD, the moving average convergence divergence. And all that I use them for really is ultimately just looking for divergences, looking for momentum to fade, where I see lower peaks in the momentum. That's really all I use. I don't use them. I know people use them at the zero line, and that matters. And that's a good, you can study that. Maybe I need to do a little more work around that. But for me, I just use them as to show divergences. And here's the clean negative divergence. Price here is moving higher, but it's moving higher below the trend, and it's diverging from the momentum. So looks good. Not as good as Adobe, but does still look promising. So I am short this one as well. Look at Google here. So Google, this is where I've had my trend line. I've had this marked out for a while, around 1484.50, right around there. And sure enough, look what happened today. Another tag of that and sold off. So that's kind of 3 confirmations that this is holding as resistance. So Google's probably going to start to move lower. Now, yeah, you do have, there was a gap. I was looking at it right here. There's a big gap right here at right about there. So maybe that's going to hold as near-term support down here around 1438. We'll tag that, maybe get a reaction. We'll have to see, but ultimately looks like it's still kind of working its way lower. And looking at the daily on Google, negative divergence on the daily, on the RSI and the PPO. And so this has been diverging. We made the high right here. This was the high, the peak of the momentum, I guess. And then on the PPO, and then as it was working its way higher, it's been under less and less momentum, and you can see that right there with the divergence. Now it's starting to break down and roll over, so we'll see if this breaks down and rolls over. This is just a marginal high. It's interesting to see this, but here was the last high before the big breakdown in March, February and March, and you can see Google came all the way back, popped the high marginally, and now it's starting to roll over. And that's what this market's been doing. It's been just kind of marginally making new highs and then rolling over. It's been doing that for a while, so we'll see. But Google looks weak. Let's look at Amazon. So Amazon continues to sell off. You can see here, here was the high that they made on earnings, and it's just been selling ever since. So this is something that I think it's important to watch. Amazon is being sold, basically. The high was the high watermark, or the earnings was the high watermark, and now it's selling off. So it's not below trend yet. And I think, because these fangs have been so strong, I would prefer to see them break trend before, really loading up completely short. I'd like to see some of these fangs start to break their trend, but it's heading down. So we'll see what happens. Does it run down to support, hold, and then continue to move higher, or does it break? But as of right now, it's being sold into. Microsoft. So they popped Microsoft. This was earnings when they gapped it up. This came after earnings. Sorry, earnings. They actually sold this off after earnings. But then when Apple reported good earnings, then they popped Microsoft, I think the following day or that day, and ran it up and held the support line. So you can see here, this is support on Microsoft. And the reason why it gapped up right to here is because everybody's watching this trend line. And then we came down, tagged it, and we're just holding that support line. So it's just holding support. You want to see this break in order to confirm some sort of a breakdown. Apple, Apple's been on a tear. And to me, it looks like a blow off top, like a buying climax is what they call it. But basically you have gap ups 2 days in a row. So far, just holding up here. So no significant selling. There's nothing to do here in terms of seeing weakness. It's just holding up here. Here's the daily chart, and we're just watching this. So it's just, right now it's just on watch. There's nothing negative about it. Here's the dollar. Dollar's still holding strength. I mean, it's selling off today, but you can see we've got a support line right here. Now, I only have 2 data points, so I can't say that's a valid support line yet. But if we get a reaction right around here, then that should give me my 3rd data point to validate the trend line. So I have it marked out. But you can see that we have kind of a head and shoulders thing going on where we've got a shoulder here, the head here, shoulder here. And so if we break to the upside, I can easily see this getting up to this 95, doing a full back test of longer term support or resistance at this point. If I look at the daily, this is your longer term. This was support and now should be resistance. We're right here. So looks good so far. Looks like it's going to play out. So one way to potentially play the dollar is to look at dust. And dust is basically it's a gold mining bear fund. Let me pull that one up here. And so dust is just a 2 times leverage gold mining bear. And the concept is if the dollar's rising, gold would be falling, and the gold miners are leveraged plays, they would fall. And this is a leverage against gold mining bear. So lots of leverage, so you don't need a huge position on this in order to make a good amount because there's plenty of leverage against gold and the dollar. So we're going to watch this. Right now it's just kind of selling off, but if the dollar moves and this holds if this holds kind of right in this area right here, then this should move higher, and should move probably up. We could probably target this 23 right about there. 23.15. And from there, that's a 36% gain. So we'll watch that, see if that plays out, but that could easily, we could easily ramp up there. Okay, and someone brought up Freeport McMoran FCX, so I thought we'd cover this. They're a gold miner, but they're really more a copper miner. Freeport does a lot more copper. They purchased Phelps Dodge 20 years ago, and they were a big copper company out of Arizona. Freeport, I have a little history with Freeport, but FCX, basically they here's what I see. You got a daily, you got an uptrend line here in FCX from the March lows. And let's narrow it down on this uptrend line just to validate the trend. It's important to validate the trend line because you can draw lines anywhere. So I think it's important to try to validate these, make sure they're correct. So you can see I got a reaction here, reaction right here. There's a little bit of a dip, but it recovered it. If I zoom in, you can see the tail. So, it would close, it was below it, but snapped right back. Reaction here, several reactions right in here, reaction right here. And then when it broke, you had a gap down, a gap and a sell-off. So that's another reaction. So here's what I got on Freeport. I think the uptrend has broken. I think it's just going sideways right now. But the major trend, the big trend has now broken. And here's what we can do. We can backtest and then fail, or it should fail. It should backtest and then fail, or can just roll over. So in general, I think that I don't like this from the long side. I think this is more of a short. Doesn't mean it's a short right here. I mean, I'd prefer to be short up here around 1370 or something like that if you got a full backtest. Or if you get a breakdown, I think below this 1250, you have minor support right here. So people will set their stops maybe right around there, and maybe that would give you impulsive selling down to the next level of support. But in general, I think that this is it looks bearish to me. Now, if you go to the daily, we do have divergences. You can see right here. Slight, it's a marginally lower peak right here on the PPO to almost even, but it's a little bit lower. And the RSI looks about even to me. But even is, even or lower is still divergence. So if you have higher price, in order to not have a negative divergence, you should make a higher RSI and a higher PPO. If you do not make a higher one and the price it runs higher, then that price is made on lower momentum. That's how that works. And so negative divergence, broken trend in general looks bearish. So I'm going to watch this one, see how this plays out. And just quickly cover the cues. Nothing's really changed from yesterday. It's basically we're just kind of hanging out up here, plateauing sideways. There's nothing bearish right now in the cues. SPY is back testing. This is your March lows. Now I could draw the trend line something like this. We could mark it out like this and just give it the benefit of the doubt, which would mean that it's not below trend. You could do that, but again, then I have a reaction here. This didn't quite get me the reaction, and I got a couple right in here. So we'll leave them both up just to evaluate. One of them says we've broken trend and we're doing a back test. The other one says we haven't broken trend. So in general, I think it's probably makes sense to wait for the cues to break in order to, the SPY's not going to go anywhere without the cues. So you just need to wait for the cues, and when the cues breaks, the SPY will break, and that's really all we have to watch for. That's all I got, guys, for this video. Give me a thumbs up if you find some value in the content. I do appreciate that. Catch you on the next one.